Hey there! Have you ever wondered how much Solana, Cardano, or Ethereum you need to retire by 2030? Now we're back, Cryptonauts. Today's video is all about planning for the future and figuring out just how much of your favorite cryptocurrencies you might need to retire comfortably by 2030 or even sooner. Now before we dive in, make sure to stick around for the entire video because we're going to break down the famous 4% rule and see how it applies to our crypto retirement strategy. So what's this 4% rule all about? Well, it's based on a study called the Trinity Study, which came out in the 1990s. Essentially, it suggests that retirees can safely withdraw 4% of their savings during the year they retire and then adjust for inflation each subsequent year for the next 30 years. Sounds pretty solid. The reason behind this rule is that historically, markets like the stock market tend to trend upwards, with an average return of around 7% per year. By following the 4% rule and factoring in inflation, retirees can theoretically ensure their portfolio lasts throughout their retirement years. But here's where it gets interesting. If you have at least 50% of your portfolio in stocks and you withdraw 4% annually, adjusting for inflation each year, your portfolio is likely to last for 30 years in 96% of scenarios. Now that is pretty impressive. Now let's apply this rule to our beloved cryptocurrencies like Solana, Cardano, and Ethereum. By calculating how much you'll need to retire based on this guideline, we can start to paint a clearer picture of our financial future. One Solana coin is currently valued at around $109, though its all-time high hit a whopping $259 back in 2021. Now let's get into some number crunching fun. Imagine you're eyeing retirement and want to know how much Solana you'll need to make it happen, following the trusty 4% rule. Now let's say your annual expenses are around $100,000. Now some might say that's a bit high, but let's put things into perspective. According to the Census Bureau, the median household income in the United States was around $67,500 in 2020, so $100,000 for expenses isn't too far-fetched. Now we want to live our best lives in retirement, right? Let's round up to $100,000 in expenses per year. Now according to Forbes, the average expenses for a family of two in 2021 were around $76,000 per year. However, we're dreaming big here, so let's stick with that 100,000 figure. Now here comes the fun part, the math. According to the 4% rule, you'll need to have 25 times your annual expenses saved up for retirement. So that's $2.5 million. Now let's convert that to Solana at $109 per coin. You'd need to own around 22,522 Solana to retire comfortably. Of course, these are just estimates and we're not financial advisors or fortune tellers, but personally, we're pretty bullish on Solana. We wouldn't be surprised if it hits $500 per coin again in the next few years. Again, it's just our 2 cents, or should I say my 2 Solana. Now according to Graham's breakdown, if you're fully invested in the stock market and you only spend 3% of your portfolio each year, you're basically set for life. With the market's average returns ranging from 7 to 9% annually accounting for inflation, you have a nice buffer of 2 to 4% each year to let your investments grow without lifting a finger. However, if you're a bit more liberal with your spending, say 5% per year, your chances of running out of money increase significantly over time. Essentially, if you want to retire with an income of $40,000 per year without worrying about running out of money, you'd need to have $1 million invested, giving you an 89% chance of lasting for the next 60 years. And the beauty of it is, this calculation works both ways. If you have $100,000 invested, you could effectively spend $300 a month in passive income adjusted for inflation. Now let's shift our focus to Solana. Imagine if Solana reaches $500 per coin in the next few years. If we stick to our annual expenses of $100,000 using the 4% rule, you'd need a portfolio of $2.5 million to retire comfortably. That translates to needing 5,000 Solana coins today, which at current price is over $500,000 invested in Solana alone. Now let's dive into the world of crypto and take a closer look at some heavy hitters like Polkadot, Ethereum, and Cardano. Now these coins have been making waves in the crypto space, each with its own unique potentials and pitfalls. Look at Polkadot, often dubbed the Solana killer by some enthusiasts. While its all-time high of 54% per coin was reached over 2 years ago, it's still down over 86% from that peak. But hey, let's assume it can reclaim that glory in the next 1 to 5 years. At a hypothetical value of $55 per dot, you need to accumulate around 4,454 dot tokens today. Crunching the numbers, that translates to an investment of approximately $327,000 today. Now that's a hefty sum no doubt, but such is the price of potential retirement bliss. Now on to Ethereum, the powerhouse of smart contracts and decentralized applications. With its current price hovering around $2,500 per coin and an all-time high of $4,800, some speculate it could easily reach $10,000 in the near future. According to our calculations, you need 250 Ethereum today to secure your retirement dreams. That means investing a whopping $625,000 today in ETH. It's a sizable investment, but with Ethereum's track record and potential, it could be worth it in the long run. Now here's where things get interesting. Cardano, the dark horse of the crypto world. With its current value sitting around 54 cents per coin and an all-time high of $3.39, there's room for some serious growth potential. Let's dream big and imagine Cardano hitting at least $10 per coin in the next 5 to 7 years. According to our calculations, you need 250,000 ADA to retire comfortably today. Surprisingly, to get this many Cardano at the current price, you'd only need to invest around $135,000. It's a stark difference from the other heavyweights, but it speaks to the potential for exponential growth in lower cap coins. In the end, it's all about balancing risk and reward. While established coins like Ethereum may require a larger initial investment, they also offer stability and a proven track record. On the other hand, lower cap coins like Cardano may present more risk, but they also offer the potential for significant gains with less upfront capital. It's a fascinating world of possibilities, and we'd love to hear your thoughts on it. Drop a comment below and let's keep the conversation going. We'll see you tomorrow. Have a good day.